Well, hello there, Jason D'Souza here, and I thought it'd be a good opportunity today to talk a little bit about what's happening in Australia's living sector, the sort of interesting elements of capital looking to invest in the sector, and some of the things that both international and Australian firms are seeing and doing to make sure they can form some good investment opportunities and partnerships in this market. So what's driving interest in Australia's living sector? Well, first and foremost, I think it is a strong and stable market, both from a legislative sense and a regulatory environment that I think is well understood in Asia and in other markets. But I think more importantly, the tailwinds that are supporting the residential sector have become very attractive for investors. Sydney and Melbourne now rank amongst the most expensive cities for accommodation in the world. There has been significant increase in rents, significant increase in housing prices, and while none of that is particularly good for people looking to enter the housing market in Australia, those looking to own a home, or for people renting who are suffering rental pressure, in terms of an investment framework, it's one that sort of attracts capital to the market because they can see some good investment opportunities. The second thing that's driving the interest in the sector has been the strong forecast migration into the country. So the last budget update had almost 1 million migrants expected to arrive into Australia over the next 4 years. This is interesting because obviously it supports the housing sector, but it has become a bit of a political issue that is forcing governments to think about how they're going to accommodate more migrants here. Where are the opportunities to create new housing? And that inevitably sparks interest of, well, who's going to finance and who's going to support the creation of new housing stock in the country. So the tailwinds behind the sector have actually increased investor interest into the market. And we've seen some really interesting things happen in terms of international capital coming into the market. So Daiwa House invested in a build-to-rent project with Lendlease in Melbourne. You have Mitsubishi Estate buying into a platform with Mirvac, Sumitomo Forestry joining with Cedar, following investments by some of the North Americans, including Blackstone, BlackRock, and others. So more and more investment, GIC, of course, into the sector as well out of Singapore. So more and more interest is generating more and more interest into coming into the market. And these organizations aren't just looking at build to rent, which is this sort of emerging market here. They're also looking at development joint ventures in build to sell residential. Now, just a quick point on build to rent. Why is it sort of a new sector in Australia? Well, it's well understood in the United States, known as sort of multifamily. It's been in the UK for about the last decade or so, where it was, known as private rental scheme. It's sort of now evolving there and has really grown as an asset class there. But it's really only been introduced into Australia in sort of the last 5 to 6 years in any serious sort of way. And that's because the legislative arrangements here, particularly for tax, weren't conducive to international capital coming into the sector. They were for Australian pension funds, interestingly enough, but not for international capital. And I think that kind of held back the sector a bit. But it is running at pace now for two reasons. One, rental growth is really strong, inviting investors into the market, but also public demand for this sort of product is growing. The Australian rental market isn't particularly conducive to renters' rights. A lot of mum and dad investment in here. Often the service quality of your individually owned apartment may not be quite what it used to be. Strange things when I arrived here, for example, rental product didn't have a fridge, didn't have a microwave, it didn't have a washing machine. These are sort of things in an Asian context are quite standard when you rent an apartment. You don't bring your own white goods. That hasn't been the case in Australia. And so an institutionally owned build-to-rent product now provides all these things, and consumers are responding, saying, well, actually, I want this type of product. I want security of tenure. I want a well-maintained apartment. I want a bunch of ancillary services that come with that. I want the sort of private dining room and the podcast studio and all that sort of stuff. So that's been a really interesting change into the market. The other interesting change, I think, is sort of the composition of investors that have been looking at the Australian market generally. My great friend Andrew Purdon will tell you that in 2023, Japan became the biggest investor into the Australian market at $2 billion, followed by the United States at $1.6 billion, Hong Kong and Singapore at $1 billion each. But interestingly, a real drop-off of mainland Chinese capital coming into the market, and the UK and Europe really sort of being not in the picture at the moment, but one would hope and expect that they will become more involved, given the complementarity of our markets. But I think that shows the level of understanding by Asian investors that the opportunity that Australia offers them in terms of a strong, stable market environment to invest in, and a strong project opportunities. And the project opportunities are the interesting things. So my line at the moment for many people has been, actually the problem isn't capital, the problem is pipeline. And one reason why we are in a position where we're in, where there are these strong tailwinds, has been this lack of of pipeline, of housing stock coming into the market. So you're seeing governments respond to that in a very strong way. States like New South Wales changing their planning rules to say around train station developments, we're going to see an increase in density of apartment living as opposed to these single dwelling residential houses, to actually get a better yield out of infrastructure, particularly large scale infrastructure investments such as West Metro, which cost $10 to $15 billion. We need to get people onto our transport network, and we need to do that by enabling them to live around transport nodes. Again, very common in Asia, very common in other markets, not so common here. And so there's a whole cultural change that's happening here that will lead to more of this integrated station development pipeline that investors, I think, are really going to like, and that I'm involved with in various guises across the board. So I think that's a really interesting market opportunity that's coming here to take advantage of this interest in the living sector, both for build to rent and for build to sell residential. So what should investors look for? What should partners look for generally? What should Australians interested in this sector look for? Well, there's a couple of things. There's a lot of, my first point here would be a lot of interest around build to rent residential, and that's the flavor of the month, but lots of opportunity also in build to sell residential and other common asset classes that are to do with living. So land lease, really interesting concept that's coming in here. Is the conversion of this idea of the investor holding on to the ground rent and people being able to own their house on top of the ground, but pay rent, continued ground rent on the bottom. So that's an emerging asset class. Companies like Stockland have been investing in that quite a lot to great success. Mitsubishi Estate, again, another one who's invested in land lease. And the other one is student accommodation. A lot of debate here around universities now having to provide student accommodation to enable students to come to the market here and continue to come to the Australian market to get their education. Again, in other countries, fairly common for students to sort of live on campus. We've drifted a little bit away from that in recent years, and I think there'll be more of an interest in that. So the living sector is expanding beyond just build to sell and build to rent. The second one is for investors coming into the market. The number one challenge that I see is finding the right partner. And that's particularly for companies who are used to doing things by themselves. Several have sort of come in and said, look, we're going to try and do this by ourselves. It's always best to find a good, strong local partner. And you've got to understand how they work and what the opportunity is and why they should bring you on as a partner. And that's something I spend a lot of time doing for international investors, is helping them understand the market, understand what they should do, why they should do it, who they should partner it, what their investment objectives are, how they align with their partner. So I would say of all the things, that must be the most critical one that I often give clients advice for. But the same goes also for local companies looking to bring in an international partner. So many local companies are very interested in the opportunity that international capital provides, international investment partners provide, particularly for themselves in market, but also scalable overseas. But you've got to understand each other's business practices. You can't just say, thanks for the money, I'm now going to go away and do my own thing. It's a marriage. You've got to understand that they have objectives, you have objectives. You have to align those objectives and make sure that you marry at the deal, you stay married all the way through the deal, and then you can celebrate the marriage when you actually execute or transact your asset at the end, where everybody gets the fruits of the labor, right, at the of the deal. And that, again, is very important. So managing your relationship not just in deal inception stage, but all the way through your transaction, making sure your personnel understand each other is another critical factor in the success of these new partnerships that are coming together, particularly around this development joint venture arrangements that are you were seeing more and more of in this market. And I think the third point I'd make is around understanding the legislative framework, the regulatory framework, and the way government behaves in the market. So I would say, and I do say, more and more government is more interventionist than ever before since the pandemic. And I think we have seen this wave of public capital come into the market in key sectors. Energy transition, housing are perhaps the two key sectors that government has become more interventionist than ever before, and where they would be previously happy just to give you a grant or give you some concessional debt, they're now looking at equity in projects. And that changes the whole dynamic of an investment marriage between a local partner, a foreign capital investor, and potentially the government. I think investors also need to understand, and partners need to understand, that government policy objectives are now being supported by them choosing to perhaps do some of the things themselves, which, is a shock to many of us who've been working here in the market, saying, wow, okay, well, that's interesting. You've decided to go your own way. And so if you're looking to launch your project, or you're looking to bring in an investor, or you're looking to participate in some way in major infrastructure projects that are sponsored by government, you can't do that without understanding what the government's objectives are, what the risks are, what the opportunities are, how you work with them, and where a policy objective actually can benefit your project from a returns perspective. And again, that's really where I spend a lot of time advising clients on how to do that when they're putting their deals together, when they're putting their projects together, and as they're progressing through it. And that takes a tremendous amount of work. You must engage with the civil service here, with third-party stakeholders, and of course with government itself. And post-pandemic, in most markets, that perhaps has become the big change that we're all getting used to, that perhaps wasn't quite so intense prior to when governments took over the running of economies, more so than they have before. So there are some thoughts I wanted to share with you today. I look forward very much to hearing your feedback to these sorts of videos when I do them. So please keep that coming in. I hope you are all well, and I will see you on the next one.